What's up guys, it's Gaddy Trades. Before I get started with this video on premium and discount, I want to address something very important, which is the purpose of these videos I'm posting right now. So right now, what I'm trying to do is post my entire model and the concepts I use pretty much every single day in my model, right? If you know me, you've been watching the live streams in Discord, this is my model up here. And the purpose of these videos is to show you guys how I use each of these concepts in my trading and in my model, right? So hopefully you guys can take some of these ideas, maybe refine your model, help inspire, build your model, right? But you guys still need to have your own trading model, right? If I were to sit here and just simply teach about what liquidity is or what imbalances are or premium and discount, for example, those videos would be a lot longer, right? They'd be like hour, 2 hours, some of them maybe even more if I really got into depth about everything I've learned from ICT and my backtest and my trading on those concepts, right? So I'm not really here teaching you guys what liquidity is or what a swing high is, right? I do touch in the beginning of the video kind of what it is, but I'm not really going into depth. The purpose of these videos is to show you guys how I use them in my trading model, right? Which is why every single video is going on the playlist Gaddy Trades model. So I just want to address that. If you guys did want to see videos of like that, where I'm basically teaching you like everything I know about imbalances and liquidity and kind of the why behind why the market moves and that kind of stuff, I could make those kind of lectures. But again, I learned them from ICT. Everything is on his YouTube for free. I know a lot of people say it's boring, it's fluff, but it's really not, right? You have to put in the hours. Those videos are very insightful. That's where almost every single person's learned them. If anyone says they develop something, if anyone's trying to sell you on the idea that, oh, you can learn this in 5 minutes, like you really can't, right? It takes time and it takes a lot of practice. If you were going to watch those videos where you like expect to learn something that quickly, you're kind of just being lazy and you're probably not going to get the results that you want to see, because it does take time, it does take repetition. With that being said, I know you guys a lot of you guys have been waiting on this video for premium and discount. So let's get straight to it. I do have a lot of gems, as I've said, so let's get to it. All right, so first things first, this is a little bit of an introduction to the video. So what is range and what is a premium and discount? So a range is simply a swing high to swing low. What is a dealing range? So the two kinds of ranges, right? So a range can be any swing high to swing low, right? A dealing range is the most recent swing high to swing low that swept liquidity on both sides of the curve. So the most recent swing high that swept buy side and the most recent swing low that swept sell side. That's a dealing range. And I'll give you guys an example. And then we also have premium and discount, right? So premium is the 50%, the top 50% of a given range. Therefore, this is an overpriced value. So this is what we call premium. And then discount, the bottom 50% of a range, which is considered cheap. Therefore, it's a discount, right? And the importance of this is price goes from premium to discount and from discount to premium, right? So you can use this knowledge to your advantage in your trading. Another thing I did not put on this slide is you want to be buying in a discount ideally and selling in a premium because, well, that's where it's cheap and you want to buy cheap and you want to sell high. So let's get straight to some examples, right? So look at this example on the left, right? Ignore these two for now. You have this example right here. So you can see right here, buy side was swept and sell side was swept. This is the most recent buy side liquidity sweep and sell side liquidity sweep. The most recent high, the most recent low, sweeping both sides is the dealing range. So you can see I marked out DR high, DR low, dealing range high, dealing range low. So this is what a dealing range is, right? So let's go back and talk about other types of ranges. So this is also a range, right? Here you have range high, range low, swing low to high. And in this case, the dealing range is not this, right? This is just a range. And there's also another range inside, which is range low to range high. Now this is a specific time frame. And other time frames, there's going to be ranges and ranges and ranges inside of these ranges. So it's going to get kind of confusing on how to use, which high, which low. When do you use the dealing range? When do you use the most recent range? When do you look at the range inside of the range? I'm going to kind of cover that during the video. And the last thing I want to show is this picture right here. So this is a dealing range, right? High to low. So just another example, you can see sell side was swept over here. Buy side was swept over here. So this is your dealing range. So in this example right here, this is the same example to the right and left. You can see I marked out this range. However, if you mark out the entire range, then you have the entire dealing range. So there's a dealing range, and then inside of that, a range inside of a range. So this is where the confusion kind of gets. And I'm going to show you guys what I use those ranges and premium discount for. So you guys probably seen slides similar to this if you've seen my videos. Now, before I continue, if you haven't seen my video on imbalances and liquidity, this video is not going to be really useful to you because I'm going to be talking about imbalances and liquidity which you should already know how I use them in my trading, in premium and the discount, and in the lens of premium and discount, right? So if you don't really understand how I use those, this isn't going to really make too much sense. I would recommend watching those first. The first thing I use premium and discount for and ranges is identifying bias and drawn liquidity, right? So which part of my model does this help me with? It's narrative and drawn liquidity. Now, I know I haven't really necessarily talked about these components that much. If you watch me trade live every day, I'm always following this checklist, right? I look at narrative and drawn liquidity to be in alignment, and then I look for a higher time frame PD array to support that narrative and drawn liquidity. And then as long as I have a confirmation and obviously time on my side, because this algorithm books on time first, that's what I'm looking to take my entries on. So what do I actually mean by narrative and drawn liquidity? Narrative is, for me, why price is going to move, right? Why is price going to go there? So you have a drawn liquidity. Let's say you have equal highs. You think that are potentially price can go there. Sure, that's a great drawn liquidity. But why? Why would price go there, Is price trying to rebalance in efficiency? Is price trying to take out sell side, right? Is price, consolidating and then you expect it to go to the range high? Is price trying to move from discount to premium, right? So that's kind of the why price is going to move, right? And then obviously the economic calendar also plays a role in that as well. And that's a whole other kind of video I have to get into. But that's kind of what I mean when I say narrative and drawn liquidity. So premium and discount helps me with that part of my model, right? So the next thing is identifying higher probability, higher time frame PD arrays. So once I have my narrative and drawn liquidity, right, I'm not just going to simply enter the market if I'm bullish. I need to look for a higher time frame PD array to support that narrative and drawn liquidity, right? Because if I want to see price go higher, right, where are we going to go higher from? We're not just simply going to go higher as soon as I come to that idea. Price usually wants to go to a level that's going to take us higher. That level is my higher time frame PD array. And selecting higher probability ones is what's going to help me reduce my losses and have better wins. So, which is helping with the third part of my model, obviously. So, and then the final part of my model, again, confirmation and time. So premium discount, of course, there's some ways you can relate time to that. Time kind of plays a role in every single aspect of any model, really, if you trade ICT, as it should. But in this case, I use ranges and premium discount to help me with optimal entries and then potential targets. So places where you can take profits, places where you can expect price to go with high probability, right? So maybe you have a higher time frame drawn liquidity, but it doesn't necessarily need to be met in that exact specific trade. So where can you expect price at least to go in your trade when you have a drawn liquidity in a certain place? That's what I kind of use premium and discount for. So this kind of plays a role with standard deviations and fib extensions, which you can use for potential targets, and also take profit levels in premium and discount, because as we said, price goes from premium to discount and discount to premium, right? So you can use that for take profit levels. And of course, optimal trade entries, which I'll also discuss in this video, which obviously again helps me with the last part of my model. So let's get started with number one here, which is identifying bias and drawn liquidity. Okay, so here we are. This is the NASDAQ daily chart. And again, I try not to do any hindsight studies. I try to look at trades I've actually taken. I know last time we looked at gold. So right now we're back on the indices. Again, this works on all assets. So a lot of people say that, can you do this on gold? Can you do it? This works on all assets. I try to mix it up in my videos just to prove so. But again, I do day trade these every single day live. So I kind of want to focus on these during my videos. So what do we have here? We have a range, right? You can see this swing high and swing low. Now, this is not the dealing range, right? The dealing range would be right here, because notice there's no buy side liquidity rate except right here. That's the most recent buy side liquidity rate. So this would be the dealing range. But for now, I'm going to focus on the most recent range. And this is the daily chart on NASDAQ currently, right? So I'm going to explain to you guys why I was bullish on some of these days. So again, so this video is not going to cover bias, but if you've seen my video, you would understand some things, right? So you can see we took out this low, right? And we have an SMT right there. So in this case, we took out a sell side liquidity with a strong wick to the upside, and we have SMT divergence. And now we've put into this range. So look at your higher time frame PD arrays. So now that you have a bias, let's say you saw the sell side rate with the SMT and you saw this long wick and you're expecting, okay, now that we have this imbalance, right? Because again, wicks are imbalances. So this is an imbalance, which is in a discount. So this is a discount array. You can expect, let's say, price to go to a premium, which it does. But in terms of selecting a narrative and drawn liquidity, right? How does this influence my bias? So you mark out this premium and discount range, or you can mark out the dealing range. In this case, it doesn't really matter, but you would expect price to move from discount to premium, right? So we have moved into premium of this range off of this sell side liquidity sweep SMT. So you can see there's going to be premium arrays right here. The first premium array would be this old low. Yes, you heard me. This old low is a premium array. A lot of people do not know that. This is 100% one of ICT's premium arrays. PD arrays. And in this case, if you use the dealing range, it's still in discount. So maybe you could expect higher prices. What I want to focus on here is using the consequent encroachment of this wick as a discount array, right? So you expect price to move from discount to premium, and you have this bullish narrative that's starting to form when price comes into this consequent encroachment of the wick. And I did take longs on Thursday. It was a red folder news, so you did see a lot of expansion, and you can see it played out really nicely. Why did I take longs off of this consequent encroachment? Basically, price went down here, and this is me selecting a higher time frame PD array to support a trade off. So I'm kind of touching on number 3 of the model, which is right here, identifying higher probability, high time frame PD arrays, right? This one's in a discount. Sorry, let me go back to this slide. So this one's in a discount, which makes a little bit more higher probability when trying to target a premium, right? We're taking the discount array, moving to a premium. I'm not going to touch on my bias for the NASDAQ right now in this video, but you can see how we kind of established a bullish narrative with the SMT and the sell side sweep and this long wick, forming a discount array. Price came back into the discount array, and you can use that as bias to potentially move into a premium of the current range or the dealing range. But we're going to get into that later. So that's the first slide I wanted to show. So here we are on the next slide. Now this is ES on the 4-hour chart, just a simple example, kind of playing off that same idea. So here we have the dealing range in this case, right? So you can see buy side was rated over here. So these highs were taken out. We put in this swing high. And sell side was rated over here. And maybe some lows over here were taken. We put in this swing low. So where is your bias in this case, right? We talked about narrative and bias and potentially expecting price to move into a discount, right? And obviously there's a lot more that comes into bias. If you haven't seen my bias video, again, you probably should watch that first. So I'm not going to cover exactly everything. But you can see we've marked out now this 4-hour dealing range, and we're going to try to frame a higher time frame PD array, so number 2, to potentially look for longs from discount to premium. So where could you have looked for longs here? So we have this wick, which again is an imbalance. So you can see price came back in, and we saw a nice move up taking out buy side. So you can be framing trades from this discount array, right? Because on the 4-hour in this specific case, there's not really any arrays here that have formed. Obviously there's this breaker now, low, high, lower, low, higher, high. But the idea is you're looking for price to move from discount to premium. So when you have this discount array and price comes back to it, right? Which happened on the Thursday. So you would expect higher prices from there. So into a premium, which is kind of what we framed our longs off on Thursday. So if you were there in the live, you know I was talking about higher prices. A lot of people were trying to short this bearish fair value gap. I had a lot of other reasons to be bullish, but this is kind of what I framed my trade off of. So you can see how you're using the discount array formed here with the bullish narrative, right? So you have a bullish narrative in play, right? You have a potential drawn liquidity, which can be premium, which can be this NWA gap imbalance that's almost around premium equilibrium. And then you also have imbalances up here that you can see potentially price come out to, which are premium arrays. So once you have that drawn liquidity and you're looking at the bullish narrative that you're starting to build, the why should price go higher? Well, we already talked about that, right? We swept out sell side. We have an SMT divergence showing external manipulation, right? We formed a discount array. And when we came back to that discount array, price is looking to go higher for a premium because that's what price does, and potentially go to these imbalances or start taking out some buy side liquidity in this premium section. So that's kind of the narrative, right? So using that established narrative and drawn liquidity, you start scanning for discount arrays, right? So this discount array from this 4-hour dealing range would be this imbalance, also this old low, and these lows are also discount arrays. So every time we took out sell side, you can see we took out sell side, we came back up and looked for framing potential a narrative and drawn liquidity higher. So basically looking for longs off this discount array, targeting a premium, which was kind of the idea of those trades over there. Okay, so I'm going to give you guys one more example here. This one is a hindsight study. And I was actually looking for longs, but I actually did not get to participate. But this is kind of what I was looking for. So I'm just going to remove these events. And this is now Euro USD. So you can see we're in replay mode, but I'm going to show you guys that these still work. So this is Euro USD, and a lot of people request me to do some Forex. I don't know if I've done Forex on this channel yet, but I'm going to show you guys that it works. So what have we marked out here, right? You should already know if you've been paying attention. This is your dealing range, sell side swept, buy side swept, you know the drill, right? So what are we expecting price to move from premium to discount? We took out this buy side liquidity pool, right? You have your chain of state of delivery right here on, this is the daily chart on Euro, right? So this is your chain of state of delivery. Let's say you're expecting prices to come to a discount, right? If it's really bullish, it could potentially respect this daily fair value gap. But for the most part, you're expecting price to come from premium to discount. So what happens here? So let's move forward. So you can see we tap back into the order block, we start going lower, and eventually we reach a discount, right? So you can see price moving from premium to discount, very simple. And if you continue playing this out, this is what I really love about this, right? So in this kind of, you can say bullish market, let's say you had a bullish narrative, and if you look on the weekly chart, right, this is a weekly range, the weekly dealing range. Where did price go to? It came into this weekly imbalance, which is a discount array. So you can look at the weekly imbalance, you can look at the daily fair value gap, which is where I looked for longs from. And I didn't get a fill, even though I was basically trying to play this daily fair value gap and discount. You can see price came from premium into a discount, the first discount array, which was this fair value gap, right? And you have your bias established. You got a very nice delivery all the way to the drawn liquidity, which was this high put in. So you can see how that range, premium and discount, is very nice, right? So you could say, why did price kind of respect this bullish fair value gap, right? Maybe some people were looking for longs from here. Well, it's very simple, right? Price goes from premium to discount. Yes, this bullish fair value gap could have delivered this high. However, you don't want to be focusing on those kind of setups, right? You really want to be focusing on the setups that are in premium and discount. Like as we said, you want to be moving from discount to premium. This is where your best trade, right? Buying here, you could say, is expensive and it's not ideal, although you can play it and there are specific times you can use that. I'm not going to get into that into this video, but for the most part, you don't want to be taking longs in a premium. You don't want to be taking shorts in a discount. As soon as price comes into this discount array, or even as soon as price crosses equilibrium, that's when you switch and you say, okay, now we're looking for potentially longs. And you can see we engineered these highs. The ultimate objective was met in just simply 2 days. And you could have found really nice entries right there. So we're going to kind of play off this idea and show you guys where you could have entered. Now, in this case, I'm using the dealing range. So I know I talked about earlier, when do I use the dealing range? When do I use a range? So I'm going to get into that right now. So let's move on from this example and see how you could have played this idea of discount to premium. Playing off the daily fair value gap, where could you have looked to potentially enter? Now this is going to be a hard one to see, and I know it looks like hindsight, but just remember this was the objective we had, and I'm showing you guys how to move from premium and discount to go back into a premium when you have your bullish narrative in this specific example. So let's study this price fractal right here. Now I know it looks a little bit choppy, but there is a change in state delivery right here. So these two down close candles that led to a liquidity sweep. This is your liquidity sweep right here. So that's your raid. And then you have these two down close candles. As soon as they're closed above, that's your change in state of delivery. So right here, they were closed above. You can see price came back. And if you look very closely, you also have a market structure shift fair value gap right here. So this is your fair value gap, which I'm marking out right now. So whether you take the fair value gap, market structure shift, right? So your market structure shift would be right here. Whether you take the market structure shift fair value gap or the order block, so remember the liquidity sweep, down close, two down close candles before the liquidity sweep, that's your order block. Or you take the fair value gap. These is what kind of delivered the play that you were looking for. So this is where you could have got into a potential trade like this, but now I want to start talking about potential targets and optimal entries. So the optimal entry in this case, this would be like kind of a swing position, which is what I was looking for, but the optimal entry in this case would be the order block or the fair value gap, which is in a discount of the daily range. As you guys remember, we were talking about the daily range, the daily fair value gap. So playing off that setup is an optimal entry. Now that's different from optimal trade entry, which is I'm going to show using the daily, using the charts on the lower time frame, which is how I use optimal trade entries. I don't really use that in cases like this. And you can see the setup that formed right there, the market structure shift fair value gap with the liquidity rate first, and then the fair value gap order block that formed off of this level, and you can see where it delivered. Now, where can you expect price to go, right? Obviously, you have this drawn liquidity, but not in all cases is this drawn liquidity going to be met, right, through every single PD rate. Because, for example, you have a swing high right here, right? And you also have this imbalance right here, which has already been traded to, but you cannot forget it, right? So there is an imbalance right here. So we'll mark that out, which is a premium array, as we discussed. So these kind of places where price could potentially go to, and of course this final objective, buy side liquidity resting from the high of the range. So how can you look to get potential targets? So this is your buy side on the daily time frame, and this is your higher time frame buy side objective. Where can you look to potentially get targets? Well, this is where I use standard deviations and fib extensions. So you look for price to take the manipulation leg into the PD array. So this would be the manipulation leg. So you can use this one. So this is when I say manipulation leg, what I mean is the range that moved into the discount array. So high to low into the discount array. You take your fib extensions. Where can price probably go to? You have negative 1.27 and negative 1.68, or 1.27, 1.68 fib extensions, right? Or you can do it with standard deviations. So in this case, because I'm not entering off optimal trade entry, I wouldn't use the fib. I would use the standard deviations. And you can see from this price leg, we pretty much moved right into -2, -2.5. Now your best trades will be moving into -2, -2.5. That's a generally good target, but obviously you can be aiming for -1. And I also don't have another one right here, which is -0.5, which you could also be aiming for. So you can see your first target would be right here, -0.5 to 1. But because you have such a large manipulation leg, you could probably expect a large expansion, especially when you're playing off that weekly and daily fair value gap level, right? So you can expect this high where you could potentially, let's say, take partials at -1 to 0.5 standard deviations, and then potentially see how this one lines up with -2, which is this high over here. That's how I would use these for take profit levels. In this case, in a swing position. Now, I mainly trade indices, and I'm going to show you guys something I learned in my back test and how you could get specific, very specific price target levels when trading the indices and day trading, to where you can expect price to go to at least for your trade. All right, if you waited this long in the video, I appreciate you, and I know you guys maybe have been waiting for potential sauce. I got the sauce for you guys. So you know I'm the master. I trade indices. That's my main thing. I'm going to show you guys this trade I took on Thursday and what I was kind of looking for. So this is Thursday, August 8th, and there was a large price move. Why was there a large price move, right? It was pretty much the only red folder, I believe. It was pretty much the only red folder, I believe, on in that week, if I'm not mistaken. So what happened here and how can you use premium and discount intraday? So we already talked about the daily chart. If you remember, we talked about the daily chart being in a discount off that consequent encroachment of the wick. So let's actually go back here and mark that out. So it's going to be somewhere like here, where we're kind of playing out consequent encroachment of the wick, and you can see you're kind of expecting that to hold. So what do we have right here? So we have this range, right? High to low. This is your dealing range. This is your current dealing range. Now, obviously, there's ranges inside. So you have this higher time frame dealing range, but you have ranges inside here. So when price is in a discount, so right here, you can expect price to move into a premium. So you have this ultimate objective here. Now, if you're expecting, remember, we're looking at the daily chart, expecting price to move to a premium. So when you come down to the 15-minute chart, you're basically looking for premium arrays, which was this consequent encroachment of the wick, to deliver price to the premium. So what happens when you have something like this? I will show you guys. Okay, so here you have a 15-minute fair value gap, and this was formed at 8:30, and we called this all out live. We said we're looking for price to come into here, and then we look for our setup time confirmation, right, to actually deliver longs. But nonetheless, this is where the narrative and everything came from. So this is your 15-minute fair value gap, right? And we have it formed at 8:30. Now you're expecting upside expansion off of this wick that was tapped in earlier, and you're expecting higher prices. Where can you expect price to go? So you're looking at the 15-minute fair value gap that formed. You're expecting volatility and expansion. You're drawing liquidities on the upside. So it's a fair assumption that you expect this 15-minute fair value gap to hold and deliver, right, a nice run to the upside. Now, we don't have to run out these highs necessarily right now, which is these relative equal highs, which looks really nice. And this is all low resistance liquidity. With that being said, we don't necessarily have to expect those highs, but what can you expect to happen. So let's mark out the premium and discount of this range. We have the 15-minute fair value gap. On a day you're expecting upside expansion. So let's say you're expecting this 15-minute fair value gap to hold and deliver upside expansion. Where can you potentially expect price to go? So for starters, you have this low to high range. Now this is your entry range. This is what I use. I call this an entry range. So this is where I'm expecting price to go. So in this case, you can use your fib extensions, right? Look where your fib extension lines up perfectly, negative 1.27 to negative 1.68, right? If you wanted to use the dealing range, now that would be right here. And you can see it still lines up with negative 1.27. This is your 15-minute dealing range intraday. However, I'm focused on this range. Why am I focused on this range? This is the question some of you maybe have been potentially waiting for me to answer. The reason I'm not using the dealing range and I'm using this range, now this is what I discovered in my back test over 1,000 trades, is I'm expecting this 15-minute fair value gap to hold, right? I'm not expecting this low to get taken. So therefore, this is the range that I'm using to frame my trade off of, right? If I were to use this dealing range, now that doesn't really make sense because I'm not using this kind of reference point in my trade, right? The PD rate I'm using is this 15-minute bullish fair value gap. If I'm expecting this fair value gap to hold and deliver a move to the upside towards my drawn liquidity, why would I be using this low range to frame that potential target, right? That doesn't really make sense. So in this case, I'm looking at the optimal trade entry potentially, and I'm looking at the fib extensions from this range, not the dealing range, right? There is a time and place to use dealing ranges. This is an example of where you wouldn't use dealing ranges. Now, I can't go into too much detail because it would take forever for me to explain, and I'm already kind of rambling on this video, but hopefully you guys can see that it doesn't really make sense. Now, this is what I discovered in my studies. It doesn't make sense to use the dealing range in this case. However, when you're looking for price targets, it makes sense to use the dealing range because where can price you can expect price to go is the premium and discount of this range. So now that we're in a discount, we look to target premium arrays from this entire range. So, and again, that being the daily range, you're expecting price to move into a premium anyway. So that's kind of building on the of ranges inside ranges and moving from discount to premium, right? So back on the chart right here, we go to the 15-minute time frame. I'm using this range. Perfect price target level, relative equal highs. If you notice, there's also a 15-minute imbalance right here, which is a premium rate, which is again a really fair price level to expect price delivery, and you can expect price to come. So obviously, I did take this trade, so obviously we don't know what's going to happen. Price came up into the 15-minute fair value gap, and I'm looking at this range, and of course you can also look at this range. So I actually didn't know this high got put in, so I would be using this range, right? Because this high is in question of this setup that I'm looking to potentially target. So your negative 1.27, right? Standard deviation, fib extension would be right there. So I'd be using this range. Price came into the 15-minute fair value gap. And if you look right there, look how beautiful this delivery is, right? Came right into optimal trade entry. Now, you look at the 1-minute time frame. This is your 1-minute time frame dealing range. So see how that plays out, right? This is your 1-minute time frame dealing range, the most recent liquidity sweep, right? There's no sell side liquidity sweeps here, right? This is your buy side liquidity sweep. You're looking at the 15-minute range, which is forming a 1-minute dealing range. Your higher time frame PD rate is this 15-minute BISI. And where did price go? Now this is absolutely beautiful, guys. 0.62 OTE level. We came right there. You can see how this is all kind of to come together. I'm glad if you guys stayed to this part of the video. Where did I actually take my long off of? Right, we called this live. If you've seen some of my videos, there was this SMT that formed, and this is where we took our long off of. So this 1-minute fair value gap. Inside of the 15-minute fair value gap. Now this is all separate from the premium discount video, but you can see that we had that, and then where did price end up going fully, right? We talked about the fib extension off of that 15-minute fair value gap, and with the power of we came into here, saw a little bit of a rejection in this bearish fair value gap, came into this bullish fair value gap, and then eventually we ended up running up and taking out the buy side objective. So it happened on Thursday PM session. So there's a little bit of retracement through the beginning of PM session into the fair value gap here, and then we eventually went up and took out the buy side objective. So you can see how we kind of played off that idea, right? The daily discount range, the daily discount to premium that we were looking off of. That was step one, building the narrative and drawing liquidity, right? With being the premium on the discount side. I mean, on the daily range. And then you look down on the 15-minute time frame, of course, paired with economic calendar and bias, right? You're looking for potentially higher prices. Now that we're on a Thursday with the 50-minute bullish fair value gap, right? How can we use premium and discount in that specific fractal to look for higher prices? Well, in this case, I'm using this specific range, looking at premium and discount, by the way. So again, this is premium and discount as well, too, right? So I know I didn't draw the box, but we're looking to long in a discount, right? We're not looking to long at the high of the fair value gap because that's not in a discount, right? So it all kind of plays together. So, which is why I showed the fib. It came into optimal trade entry 0.62, formed SMT into the 50-minute bullish fair value gap inside the 1 minute inside of it, which is the 1 minute dealing range, right? We talked about the 1 minute dealing range, which is right here. And then it came perfectly into your fib extensions, and you had a lot of levels to potentially take profit. One more thing I want to show you guys would be the standard deviations in this specific case. So we're going to come back here, mark out the 50-minute bullish fair value gap. How could you use standard deviation in this specific example? I want to show you guys. So remember, this is your, what did we say this was? This is your 15-minute bullish fair value gap. So it actually is right here. So we tapped in right here. Where is your manipulation leg? Very simple. So there's actually two legs here, if you notice. So there's the leg that entered. So this is the high to low that entered the 15-minute fair value gap. Sorry, it would be this leg. So the low and the high that entered the fair value gap. So where does that potentially lead to? You can see -4 standard deviations was met pretty much perfectly in this case right here. And that was later in Asia. And if you target around -2, -2.5, right, would have been a perfect delivery. So this is how would you use standard deviations in this specific instance. I know I used the 50-minute fair value gap and we did that range, fib extensions. But like I said, it works with both, right? If you did the fib extensions, you can see it kind of lines up right there pretty perfectly. And obviously you can do the standard deviations on the 15-minute time frame as well. In this case, it would just be 2. So if you were looking at this price leg, right, you have -2 standard deviations of the 15-minute high to low. You can also drop down to the 1 minute, see how much your entry could potentially expand to. Now, this is nothing without narrative, drawn liquidity, and all that kind of stuff. But you can kind of use it in your trading, so you can see how these two line up really nicely. So one of these is fib extensions. I use the fib extensions when I'm using Fibonacci to enter a trade. I use their standard deviations just to see if it pairs up really nicely with where I'm expecting price to go. And in this case, they line up really nicely. So like I said, aiming for -2, -2.5. Obviously, the risk to reward matters, but that's kind of a good place to go to, right? -4 is usually your max. And in some cases, obviously, you can have -5, -6, and so on and so forth. However, that's kind of a lot to expect for a single expansion. However, it is possible. You kind of want to line up your drawn liquidity with those levels that are pre-existed. So hopefully that starts to make some sense of how you can identify bias and drawn liquidity using premium and discount, right? And identify the higher probability, higher time frame PD raise, right? Which would be that consequent close from the wick that we talked about and that Euro USD example. And then using optimal trade entries as confirmations of good entries, right? That was a very optimal entry. We came right into 0.62. We had the clear drawn liquidity, the narrative, and you can see the potential targets, standard deviations. So with that being said, hopefully you guys can understand how I use premium and discount to identify bias, drawn liquidity, narrative, and drawn liquidity. And then also, okay, with that being said, I hope you guys can see how I use premium and discount to identify bias and drawn liquidity, how I use premium and discount to identify higher time frame PD raise, how I use premium discount with optimal entries and potential targets to take levels of profit, right? So we know price moves from discount to premium, premium to discount, and you can use that concept alone in all of these aspects. And that's how I use it in all of these aspects in my specific model. If you have any questions, feel free to ask me in the comments below. Till next time. Peace.